Sydney house prices now back to 2016 levels after 6.5% drop, data shows. So they're going back. Ooh, she's talking. Hold on.
Most of our capital cities recorded a decline, which has marginally improved affordability. Sydney experienced the largest annual fall out of all of our capital cities, but what this has created is a rare opportunity for buyers within the Sydney market. What we are seeing is a greater competition between vendors, and what this means for buyers is they have a greater power to negotiate, but also the luxury of time in making their purchasing decisions. What we've seen in Melbourne is prices fall over the quarter and over the year, but it's the middle and upper sector of the market that really have felt the brunt of this downturn. What this means for any buyer looking to upsize is certainly opportunity. We're still seeing that entry-level property price growing, but that mid to upper sector now is falling. Despite house prices in Brisbane still rising on that annual basis, they've experienced growth in this market since 2012. But what Brisbane has missed is the East Coast price surge. And so what that means is Brisbane remains a magnet for buyers looking for an affordable city to reside. Adelaide remains an incredibly robust market. We are still seeing house price growth over the year, and this market has experienced 5 years of consecutive annual price growth. But even considering it's had 5 years of growth, it remains one of Australia's most affordable cities. Canberra continues to buck the national slowing trend, and house prices continue to grow on that annual basis. But the pace of growth has eased relative to the same period last year. Residents are lured to Canberra by a relative affordability, a higher average wage, growing jobs prospects, but also the lifestyle the nation's capital has to offer. Despite price falls within Perth, the Perth market is showing some early signs of recovery. This really is concentrated within the upper sector of the market, but I think overall it will still take some time for the broader Perth market to recover. Hobart remains Australia's strongest capital city performer, still recording double-digit annual growth both for houses and for units. Buyers remain active within the Hobart market, and with a limited supply, this means pressure will remain on those prices.
That was really good, guys. That one went over the country here. Pretty much the whole country and where it's sitting at. And Hobart is big because Hobart was very inexpensive and everyone decided to move to Hobart, Tasmania Island. And everyone just moved there because it was affordable and a lot of people left. Okay, Sydney house prices now back to 2016 levels after 6.5% drop, data shows. Sydney house prices have fallen 6.5% over the past year, with the market resetting to 2016 level. New data shows a regulation-led slowdown saw the city's median home price drop $76,616 in a year to September. The latest Domain house price released on Thursday shows almost half of the drop was in the past quarter. Experts have described what is the steepest annual house price fall in decades as a necessary downturn after years of runaway prices. To slow the property market down, the Australian Prudential Regulation Authority and Reserve Bank thought the best way to do this was through credit tightening and macro-prudential measures. That's starting to bite. The AMP Capital chief economist Shane Oliver, Dominion senior research analyst Nicola Powell said that the latest downturn was unique because it had been driven by regulatory changes rather than interest rate hikes or economic downturn. No! People are running out of their money, they're using the equity in their homes, and people can't upgrade. A lot of people are stuck in 1 and 2 bedroom places and trying to start a family and can't upgrade. So a lot of people are leaving the bigger cities. So now it's pushing the national trend higher, because the cities where the average houses were 200,000 are like 600,000 now, and it's making a whole hoopla of things. You know what I'm saying? Sydney buyers and sellers are now operating in housing market with prices at late 2016 level, she said. It's moderation driven by policy changing. This really has never happened before. It controlled the downturn in the Sydney market because the house prices made such a continued growth over 5-6 years. There's the Sydney's median house price over time. So look at this. Now it's trending back down. Where do you think it's going to go? And they're admitting this is not even raising interest rates is the cause of it. What happens if they're going to have to raise interest rate with the Australian dollar tanking? Sydney's median house price is now at $1.1 million, down 8.1% since the market peak in mid-2017. So if you go up 0.25%, your payments are going to go up $6,000 to $9,000 a year if your interest rates go up at $1.1 million a year, people. That's why in Australia they're very scared to raise interest rates. And property prices have further to fall, according to Dr. Oliver, who recently revised his forecast to a 20% top-to-bottom fall by 2020. Credit tightening had proved more effective than he expected. And auction clearance rates were also lower than anticipated. Such a fall would put Sydney prices back to 2015 levels. Here it goes here. Capital City median house prices, September quarter. There's your change. Your change is right there. There's Melbourne, there's Brisbane, Adelaide, Canberra, Perth, Hobart, Darwin, and then there's a national average right there. So I think Sydney is going to push down the entire national average because it's so way overpriced. There's the Sydney median unit price over time. So right now you can see this trend here for the last 3 months. This is per year, every September per year that they've been doing. So it's been hovering lately, so it's been very stagnated. Let's move on. Canberra's clearance rate falls below 50%. It's from today's date. As rain, hail, and lightning fell across Canberra on Saturday, so did the auction clearance rate. Canberra's clearance rate plummeted to a low 45%, down from 56% on the previous weekend. The results from 61 reported results is the second lowest clearance rate of 2018. In July, the clearance rate dropped 43%. However, there were only 34 scheduled auctions. It's going to go back to the old days, people, where you go see a house, you put an offer, they counter the offer, you send in an inspection, you get the inspection done. There's no more auctions. Canberra's most expensive sales were recorded at 83 Captain Cook Crescent, which sold for $1.53 million for that. Yeah! That's what you call bang for the buck. Yeah! The property was shortly contested and it created a lot of interest in the local market, she said. There were 3 other sales above $1 million on Saturday, and they're going over the sales and auction clearance. Yeah! $5 million for that! Yeah! You know what I'm saying? Yeah! So, woo! Let's move on. Melbourne house prices dropped 4% in 3 months. New data shows, again. Melbourne's median house price dropped 3.9% in 3 months and is falling faster than any other capital city. New data shows. The latest slide puts the city's house price at the same level as those recorded in early 2017, according to the latest quarterly Domain House Price Report, released on Thursday as the first annual decline in 6 years. Prices have headed south since December, when the median hit its peak of $909,000 on the heels of 5-year rapid growth after a $35,000 quarterly drop. The median is now sitting at $852,000. The falls follow the largest runs of consecutive growth in recent history, when house price rose 72.9% in just over 5 years. Holy, what a return! Domain senior research analyst Nicola Powell said having this pullback is a natural dynamics of the property cycle. There's the Melbourne median house price over time. So here it is. It's dropping like a rock, and it's one of the fastest falling. There's the Melbourne median unit price over time. You have it here by year from 2000 all the way to 18. The market has taken a turn in a good way. The buying frenzy has calmed down. We noticed that good properties were selling at reasonable price. I still don't think $1.1 million is reasonable for anything unless it's got a helicopter pad, 2 tennis courts, 2 tennis courts, a pool, an indoor pool, and like it built on the intercoastal so you could park your boat in your backyard and just go out and then go back to the ocean if you want. So That's what's happening right now. Since September last year, roughly 200,000 has been shaved off the median house price in both regions. What happened to those real estate agents? If you don't buy now, you're never going to own. You will never own. If you don't buy, you'll be bought out of the market forever. What happened to those people? I don't see them anymore. We're buy now. You will never own. You will be forever forgotten in this oblivion. Since September, 200,000 shaved. Guys, 200 large shaved off your value? Try going to the mob and saying, I'm going to shave off $200,000 of what you lent me because I don't think it was worth that much. You know what I'm saying? Despite October being one of the city's biggest selling months of the year, auction clearance rates have sunk below 15%. Springtime in the southern hemisphere. Go over and buy. It's buying season. Prices are going to go up in the spring in Australia. I haven't seen nothing. I read all the articles. Oh, yeah, they're going to go up. It's just this little dip we get, towards the end of winter and spring hits and everybody's out buying homes. No one's buying homes. Why? Because nobody could afford it and nobody could secure the financing. And that's what's happening. All right, let's keep going here. Property's ticking time bomb is about to go off with 1 million Aussies affected. Ooh, let's look at this. Got a bomb in it. Let's watch this video. Hope it doesn't have music. Oh, it's got music. The Aussie creators are of Dirty Dancing with banks. There's only one way to sum up our housing market. It'll get worse before it gets better. Australia Price Index. Capital city prices have fallen on year over year. While it might seem like a good time to buy, experts fear a crash with dire consequences. There's Martin North. He's got a good channel. Check him out. Tighter lending and higher interest rates could shift downturn to potential disaster. There's 1.7 trillion held by the banks in mortgages for owner-occupiers and investors. That's higher than any other country. That it definitely is. The Western world by long. So what's next? Sellers need to set more realistic values for current market. Buyers, take your time. There's lots to choose from and not much competition. So guys, it's going to be a buyer's market, but be careful when you buy, guys. Just relax, breathe, especially if you've been waiting on the sidelines. And guys, if you guys want, check out Martin North, the Walking World. Martin North has his own channel. He's a analytical analyst in Australia, and he knows the itty gritty numbers and all the dirt that's been going on in Australia, and kind of trying to make sense of it all so viewers can understand. I don't want to get too technical when it comes to. I don't want to get super technical. I want to keep it really. Hey, what's going on? This is what these guys are saying in this article. What do you guys think is happening on the ground? People call in, give us an insight. There's a lot of good channels out there for you guys to check out. Martin North is definitely one of them when it comes to real analytics and real talk and real understanding what the game is, itty gritty numbers and stuff. So comment section is going nuts. So a lot of people fighting in the comment. Guys, we need to relax in the comment section, please. Someone's saying to buy gold and silver and sit tight. Okay, let's keep going here. So, what is happening? Almost 1 million Australian homeowners will be dealt a serious budget blow at the start of next year. It could be the struggling property market's ticking time bomb. So again, back to what I said before, more than 900,000 of them will be expiring from January, reverting to principal and interest payments. This is the big thing that's happening in Australia. A lot of people took interest-only mortgages because a lot of the banks just believed that housing was just going to keep going up and nowhere but to go up. So if you just pay the interest only, you can build a bit of equity over a couple of years, and you could refinance and have a bit of equity there. You know what I'm saying? But no, it didn't happen. So interest-only mortgages is an absolute nightmare. I recommend for people to start putting things into place, measures into place to fix this problem and get out of the mortgage or the current financial situation they are in. And look at this. Oil, gold. Gold is up right now. Oil's down. Oil's slumping right now. U.S. Australian dollars at 70 cents. It's up right now. Market's just open in Australia, by the way. Australian stock market, stock exchange is down 2.2%. Wow. That's pretty tight. It's heavy, people. Australia's banks should prepare accordingly for stricter accounting standards on risky home loans. Another one, guys, a lot of junk on the books. A lot of underwriters approving deals that should not be approved. Negative gearing, all that crap. People expensing their house like it's a business. And if they owe taxes at the end of the year, they use the negative gearing on their home to offset it so they don't pay so much tax. Stephanie Ravango in the comment section is saying to buy oil and gas. She's 100% right on that. I've been investing heavily in oil right now and moving out of the pot market. I sold all my pot stocks in the last week and a half, 2 weeks ago. So I sold all my pot stocks. Emma Murray saying, Mike Martins, what is your opinion on starter homes? Better buy a starter or wait, or buy more long-term home? Buy a more long-term home. That's what I did. I saved up and I bought this house, and I never have to upgrade this house ever in a million years. Well, I mean, I have to renovate it over time, but I never have to upgrade to a bigger house. I have tons of bedrooms in here and tons of bathrooms, and I think I have 7 baths in this house. I don't have to worry. I don't have to upgrade anything until I get older, and then I can leave this for my kids and retire with my wife to the Philippines. So Steve the Plumber is going to be live with us in a bit. So guys, what I'm going to ask for is I'm going to do my first hour of the show, and then I'll have people call in after the first hour, after I get through some of these articles so people can see what's going on. So give me a few more minutes to finish these articles, and we'll move on to callers from all over the English-speaking world. House prices falling over $1,000 a week in Sydney and Melbourne. Again, $1,000 a week. That's 52 large a year on average. Australian housing bubble could pop, says experts. You know, what I don't understand about this is, why are these people saying this now? Where were these people a year ago? I was here tooting my horn. I was here telling everybody none of this is normal. Hey, why are you paying 15 times more your salary to buy a house? That's not normal. Oh, Mike, you don't know what you're talking about. Why aren't these professionals 2, 3, 4? Go back to my videos. My channel was taken down, and I had to restart my channel, I think, in 2015. And before that, I had another channel where I was talking about housing, going back to 2000 since the 2010 Winter Olympics. I don't know if anybody remembers that channel, but it was still called Mike Martins. And I started it during the Winter Olympics in Vancouver in 2010.